So in previous lectures we talked about the fact that over 90% of doctors fail. They fail financially and economically is what we're specifically referring to. And that is because of, based on research, three major things: lack of efficiency, lack of control, and lack of safety. Today I wanted to delve in a little more to the idea of a lack of efficiency. Physicians lose a minimum of $1 million in their careers to unnecessary taxes, insurances, expenses, costs because of this inefficiency, because they're in the wrong economic structures. So these structure issues can go from whether they are incorporated, what type of corporation they're in, whether they're, if they have their own practice, if they're in an LLC, an S Corp, a C Corp, an LLC, limited liability corporation, acting as an S or C Corp. Initially, when a practice starts out, they should usually be in an LLC, which creates asset protection, acting as an S corporation. And eventually they evolve to, when they have enough surplus to save that goes beyond the deductibility items of an S Corp, then they would convert to a C Corp. A specific note in terms of this issue: a lot of accountants will tell their clients not to establish a C Corp because it costs more to account for. Fair enough, a lot of accountants charge more for the C Corp than the S Corp in terms of doing the tax returns. Another thing they say is that you're doubly taxed. You are doubly taxed in certain circumstances, actually, but you're not doubly taxed if you, again, are efficient with the structure. A C Corp acts like it is literally, legally a separate entity. So the C Corp will receive money and file tax returns as an entity, and then the individual that owns the corporation or owns part of the corporation, whatever income they've received, they will file the tax return and with the incomes that they've received. A C Corp would pay taxes, and then the individual would pay taxes, and that's where they get the idea of a double taxation. The thing of it is that the C Corp is only taxed if it has income to report at the end of the year. So you can function as a C Corp and still be singly taxed if you make sure before the year end, meaning the December 31st, you have cleared out and you've either expensed out, funded pre-tax benefits, or paid out all of the monies in the corporation, so that there is zero net income to report, therefore there's no taxes. Now, that means that whatever excess income went to the individual or to the individuals that own the corporation, and they pay taxes on the remnant dollars, but it's still a singular tax and not a double tax in effect. So with this idea of efficiency going into it, it is not just are you in the right structures, but are you taking advantage of all of the available methods of creating efficiency, meaning efficiency would mean not losing money unnecessarily or not having money expensed out. So as a philosophy, to be efficient, if you have a practice or you work for somebody, whatever that practice, if it's your practice or whether it's a practice that you work for or a hospital you work for, it's important that any one of those entities that you work for have as much pre-tax savings or benefit plans to participate in as possible. That their pension plans whether they're defined benefit or defined contribution, have the highest amount of limit in terms of being able to put pre-tax dollars into them. So as a philosophy, one of the biggest areas that you can reduce unnecessary costs is to reduce unnecessary taxes. To reduce unnecessary taxes, you want to fund as much on a pre-tax basis as possible. So fund your pension plans, fund your pre-tax healthcare plans, disability, whatever benefits, your insurances, as much as you can, or all of it on a pre-tax basis. And that requires the right structures and the right implementation of the right plans into these structures that are funded or provided by the entity that you work for, whether you own it or whether you work for it. Obviously, when you work for somebody, you don't have as much control over the benefit plans and the pre-tax savings environments or retirement plans or benefit plans that they have. But that could be one of the definitions for who you choose to work for, because it becomes essential. Having two incomes being equal, if you're getting the same income from Hospital A as Hospital B, but Hospital B doesn't allow you to fund retirement plans and provide for health insurance and things on a pre-tax basis, and A does, you're effectively making a lot more money with Hospital A if you take advantage of those plans. Because if you're putting your money, every dollar that you put into those plans, you're saving 20 to roughly 40% tax dollars that can go towards your future. That's significant. So going on in terms of inefficiencies and structures, one of the first things we talked about is taxes. One of the second areas is unnecessary insurances. Now, it's very important to distinguish between the idea of necessary costs and unnecessary costs, because right now we're not really talking about necessary costs. There are necessary costs. I mean, you should have health insurance. You should have, if you have a family, and depending on your personal value, you should probably have some life insurance. You should have you should consider disability insurance. You should consider, if you have your own practice, having a nurse and paying her salary. You should have, employees for your billing, unless you're using a billing company, reception, and so forth. So the point is there are necessary expenses. So we're not talking about eliminating necessary expenses. We're talking about unnecessary expenses, expenses that didn't need to be expended. And since we as doctors lose so much money to unnecessary expenses, it is very important to be, again, efficient. So some of the costs, one of the second greatest costs is unnecessary insurance costs. There are necessary insurances and there are unnecessary insurances. There are efficient types of insurance and inefficient types of insurance. And we can't get into the discussion of every type of insurance there is and what would be efficient or more efficient. But one of the things to know is that if you're implementing insurances, you want the people that are implementing it to be objective. Being objective, making objective decisions, means that they're not compensated based on, they make more if they tell you to do this insurance than if they tell you to do this insurance. Now, I'm not saying that everybody is going to guide you into the improper insurance based on the income they're receiving, that they don't have the ability to be objective, or there's not good people out there. At the same time, it obviously can create bias. Another thing is, in these areas, a lack of knowledge and understanding of doctors' lives and their finances specifically, in effect not being a specialist in physician in their lives. you can make what you what you believe is a good decision for them. And it actually, although it might be an ethical decision, you made an ethical decision as an agent or something to give them something. It wasn't the most efficient decision. So again, we can't go into the breakdowns of every type and what's good and what's bad. But in general, insurance costs is another big area. So taxes, insurance costs, and expenses. Expenses, again, is another huge area to get into, but things like when you start up, there are expenses where people put too much of the initial capital in things that don't generate patients or don't increase income. For example, if you're a dentist and you build a building and you want to have 5 operatories ultimately, rather than spend money on putting equipment in the chair and x-ray and so forth into each room, you might put it into 2 rooms and utilize the money that you are going to put into the other 3 rooms right now for marketing and practice awareness. We're getting the word out in the public so that you increase your income, and so then you get enough patients where you need more than 2 rooms. So that's a great problem to have. It's better to have so many patients that you need more operatories or procedure rooms than it is to have operatories and not have enough patients to fill them. So one of the mantras that you need to hold on to is that don't let the overhead demand the business. Again, like I said, there's so many directions that we can go when we talk about individual expenses, and I know in your mind you're thinking, give me examples, but this was simply meant to be a short format to kind of give an overall picture of efficiency or the lack thereof.